This diagram here is the second page of your Unit 1 study guide. I know it looks complicated, like it's a bunch of T accounts with arrows pointing here and there, but this is going to be very important for you doing the homework and quiz for Chapter 14. And I'm going to be filling this out and showing you how inventory flows. You know, we're a manufacturing company. We're going to buy raw materials. And let's just say, you know, we're making bicycles and selling bicycles. What are we going to buy? We're going to buy tires, wheels, frames, chains. And when we buy them, we're going to put them right here on the left side of the raw materials T account. If you remember your debits and credits from Accounting 101, and I hope you do, but if not, it's okay. I'll get you up to speed. This raw materials is an asset because we buy this stuff and we're going to use it to make money. So anything we buy that's going to make us money in the future is an asset. And anytime, you know, we purchase assets, the asset amount goes up. We put it on the debit side. So you see the word purchases here? We had some raw materials at the beginning. We had some chains and wheels and frames and brakes and all kind of stuff that goes to make a bicycle. And maybe the grease that we grease the chain with, it's all going in here. Now, I'm sure we had some stuff left over from last month. That'll be here in your beginning balance. And then as we purchase more raw materials, we go here. And then we're going to talk about what happens when we actually take it out of the raw materials room, and then we put it on the factory floor to start making bicycles with it. We're going to credit raw materials inventory and what? Work in process. Debit or credit? Debit. And then when we finish bicycles, we're going to take it out of work in process and put it into finished goods. So we'll debit finished goods. This is finished bicycles that are ready to sell. Now, they haven't been sold yet, but they're ready to sell. So we'll debit finished goods and credit work in process. And all these little abbreviations we'll learn about later. So that's just a general overview of the process. Let's talk a little bit about manufacturing. Some terminology that you're going to need. Direct costs. These are costs that are directly related to making bicycles. So we're making bicycles, right? And I'm using that in the example here. Tires, seats, handlebars, cables, the frames, the chains, the brakes, the pedals. So these things up top, these first 1, 2, 3, 4, 5, 6, 7, 8 are direct materials. Now, of course, we have bike maker wages. This is the money we pay these guys here. See these guys here working hard? That's called direct labor. So the two kinds of direct costs, folks, are direct materials, which is these 8 things, the top part here, and then direct labor, which is the wages and benefits of our workers. So those are direct costs. Now, we're not doing anything with this right now. I just want you to know the definition. We can directly trace them to this bicycle or that bicycle. But as you know, if you want to open up a place that makes and sells bikes, you're going to have more costs involved than just the materials and the labor. You are going to have indirect costs. These are costs of running our business, but we can't really say, oh, this much goes to this bike and this much goes to that bike. We can't really trace it. Now, these things over here on the right, these indirect costs, these are just things that it costs to run our business. You know, the accounting and the factory administration, you know, the rent on the factory building itself. If we don't own it, we just rent it. You know, obviously, if we stop paying our rent, we won't be able to make any more bikes. So this is a very essential cost, but we can't really say this much rent went to that bike or this bike. The rent just is a kind of a fixed cost every month. Same with all these. The factory manager doesn't really work on a specific bike, right? He's just walking around. She's just walking around, making sure the workers are working hard, right? The factory utilities, insurance, depreciation, all these things are like indirect costs of running the factory. but we don't really trace them bike by bike. Like we said, direct materials is the actual things that you can see on a bike, and we can trace it. And direct labor, as I've already said, are the wages paid to the people with their hands on a bike. They're actually the ones assembling the bike. Don't get that confused with what they're paying the manager of the factory who's just walking around. That's more of an indirect cost. And then we have this third category, which is just a big old all-encompassing category, and we call that overhead. Overhead is basically all the costs of running a business that's not direct labor or direct materials, okay? The maintenance workers who maintain the factory and custodial work, and they clean the factory, but they're not actually making bikes. Now we have something called indirect materials. There should be an S on that. Indirect materials. Now these are things that kind of go on the bike, but they're so small, we just don't account for them screw by screw, staple by staple. And I mentioned the grease that we grease the chain of the bicycle with. These are just little materials. They're relatively insignificant, and we don't really include it with direct materials. Please note, indirect labor and indirect materials are part of overhead. What I want you to keep in mind is that the manufacturing costs include three categories. The three types of manufacturing costs are direct materials, direct labor, and factory overhead. Those are the costs that go into making the bicycle, the product. The other things like selling expenses and general and administrative expenses of running the company as a whole, those are called period costs, and we do not include those in any of this blue stuff you see. The period costs are just, they're on the income statement. We will show them, of course, but we're not going to include them in the cost to make the product. So this slide is just a little overview of what I just talked about. Product cost are the costs, direct and indirect, to make the bicycles. Period costs are just expenses on our income statement. The distinction here is very important. The product cost, these go on the balance sheet as assets. These go on the income statement as expenses. Do you see what all of these have in common on the right? Advertising, that's to sell the bikes, right? Not to make the bikes. So those are called period costs. See? So if you see the word salesperson or advertising or office, it doesn't go with direct materials, direct labor, or overhead. Remember, the direct costs are direct materials and direct labor. The indirect costs is factory overhead. Balance sheets. Yeah, this is the difference between accounting 101 and 102. A service company is going to have, this is the balance sheet, right? Assets, cash, accounts receivable, supplies, some other stuff like that. And a merchandising company that buys and sells finished goods, they would have an account called merchandise inventory. Now, here's what we're going to have in this chapter. Here's our balance sheet. We don't just have one account for inventory, do we? Because our inventory could be in three different states of being. We have this stuff, which is like just the raw parts, like chains and wheels and frames and stuff. Then we have some bikes that have been started, but they're not finished yet. They'll be in here in this account. And then we have bikes that are finished and ready to sell, but have not been sold yet. We are going to use our little diagram. This is number 4 in the practice. I think it's also number 4 in the homework for chapter 14. So you will be doing it, but maybe with different numbers in it, perhaps. So they want you to compute ending work in process using this information. So raw materials purchase, where does that go?
Debit raw materials inventory.
And since we're purchasing raw materials, it goes on the left side, the debit side, and the number is 124,000. I don't know if we had any raw materials to begin with. It doesn't say yet, but maybe we did. Now, what about this? Direct materials used. What does it mean to use direct materials? 74,000. What that means is, now please note the name of this account. The name of this account is not direct materials inventory. The name of this account is raw materials inventory. So we have both direct and indirect materials in this same T account. So when we use direct materials, it's coming out of this number. It's coming out of what it was over here. So direct materials used. So we take it out of the raw materials room on the left and we move it over onto the factory floor. So we're basically, by crediting this account, we're taking 74 out of here. And I can show my balance here, right? It's those minus these, right? Is that how we do a T account balance from 101? Yeah. Yeah, so we had 124, right? Or I don't know how much was in here. I guess nothing. And then we took out 74, so that leaves us with 50, I guess, right? Take it out of there and we put it into work in process. And I can kind of do this the same. So this is just those minus those. Direct labor used. What happens there? So what I'm going to do is put the direct labor just right here. Factory overhead is 95,000, and that goes here. Now, factory overhead is going to come out of this account, believe it or not, and go here. We'll talk more about overhead in the next chapter. Direct materials comes out of this account and goes into here, but direct labor just pops out of nowhere because it's basically just the efforts of our employees. Work in process beginning, 26,000. So what we're saying is here, at the beginning of the month, we had already $26,000 worth of bicycles that weren't finished yet. They'd been started, but they weren't finished yet. And then we put more direct materials, direct labor, and overhead into the process. Cost of goods manufactured is going to be the bikes we finished, 220,000. That goes here. So as you can see, we already had that much in process. We put more materials, labor, and overhead into the process, which gave us like, I don't know, 250,000, but we finished bikes of 220,000. So we basically put it into finished goods and take it out of work in process. So do you understand that the point that we actually finished this much of bikes? So because they're finished, they're no longer in process. So we take them out of here and put them into finished goods. Now, we haven't talked about journal entries. I know a lot of you hate journal entries because we did them like all the time in 101, but these are actually all journal entries with debits and credits. For example, what I just did is literally debit finished goods inventory, credit work in process inventory. They're asking for work in process ending. So what we can do is fill in this, right? The beginning work in process was 226,000. Now the cost added, direct materials used, direct labor used, and overhead. Those are the three components of manufacturing, right? So the direct materials used was 74,000. The direct labor used was 55,000. And the factory overhead was 95,000. So what this gives us is, that's total manufacturing costs. Total manufacturing costs is basically these three numbers. Okay, I'll put them in red for you. This is total manufacturing costs, these three numbers. So total manufacturing cost is $224,000. Please note, total manufacturing cost does not include this beginning number. Notice that when I add these three together, it gives me 224. If I was to include the 26,000, that'd be 250,000. So it looks kind of funny, but total manufacturing cost is the sum of these three things only, not that. And then the total cost of work in process is all of it. But then we're going to subtract out cost of goods manufactured, right? Which that's 220. And that means our ending work in process is 30,000. So that's how you would do this problem. Do you see how important understanding the flow of these numbers is? All right, and how to understand how to read a T account. It's always these minus those equals that. So that's why we subtracted cost of goods manufactured. So what we're saying again is that this is the amount that was in process at the beginning. We added these for a total of 250. And then we actually finished this. So what's left unfinished? That's the work in process ending. This will be next month's beginning work in process. Let's compute cost of goods sold. What does it mean to have beginning finished goods inventory? So this is stuff that was left over from the end of last month that we hadn't sold yet, beginning balance and finished goods. And then this is the cost of goods that we actually finished, right? So it comes out of work. So it was here, but we're taking it out. And we're putting it where? It's ready to sell, right? So we're going to add that to finished goods. So the cost of the goods that we did finish or finished manufacturing is going to be added to finished goods, taken out of work in process. And then somehow at the end of the year, we're left with only 700. Uh-oh, what does that mean? We had this much bikes. We added this much more to it. But for some reason, at the end of the month, we only had $700 worth of bikes. So what must we have done?
Sold a lot of bikes.
Sold a lot of bikes. So that's basically going to be, that plus that, right? But minus this, because we didn't sell those, right? So we sold 3,800. So I would compute it finished in goods beginning of 500 plus the cost of goods manufactured. Add cost of goods manufactured, 4,000. Goods available for sale, 4,500, right? But then what was left? Less ending finished goods. We were left with 700, right? So that means we must have sold 3,800. See that? So it's just, backing into the number that we sold. A lot of this is just plugging in numbers on here and then just figuring it out. I think that's about all the time we have, unless you just want to ask me some more questions. This chapter is all about what we just did. Like even this one, it says how much raw materials was used during the month. You're filling in the T accounts to find the missing number. So this is like an introduction to the concepts, but we're going to be getting more into all this stuff later. And there's the definitions, folks, that are super important. Just make sure you're aware of that. Total manufacturing cost is direct materials used, direct labor used, and overhead applied or overhead. Total manufacturing cost is all three of these. That's not on here, but you do need to know that. So make sure you take note of that, okay? The rest of this is just how does a T account flow? I'm planning to go through QS 14-11. I'm also planning to go through QS 14-13, as well as 14-15. And finally, this big one right here, an income statement. Now, the format for the income statement, you can refer back to the chapter. Look at the income statement. We have sales minus cost of goods sold equals gross profit. Hopefully you remember that from Accounting 101, where we did have these types of income statements for merchandisers. Merchandisers, remember, they buy and sell finished goods. So they don't make anything. They buy and sell finished goods. For manufacturing, cost of goods sold is a little more complicated. Cost of goods sold is basically a formula, and I'll refer you back to the T accounts for that. Remember, cost of goods sold is right here. It's this T account here in yellow. To start off at the beginning of the month, we had $100 of finished goods, but then we finished some more, right? We finished, I don't know, $1,200 more of finished goods. But what did we sell? Well, you'll have to be given that number, right? Or we could calculate it by looking at our ending balance. Let's say we've got $300 of finished goods at the end of the month. See, that's our ending balance. Started off with 100. We finished 1,200 more, of goods, but we only ended up with 300 left. That means we must have sold 1,000, because this gives us 1,300 minus 300 is 1,000. So that is what we must have sold. So if you translate that to this right here, finished goods beginning plus what we manufactured minus what we ended with is what we sold. To do a income statement for a manufacturing company, of course, the first thing is sales, right? Now, cost of goods sold isn't just a number we plunk in there. Cost of goods sold has got to be calculated. What is cost of goods sold? It's my finished goods at the beginning plus the cost of goods manufactured, what we did finish, minus what we ended up with. Well, these two added together equals goods available for sale. Then we subtract what we ended up with, less finished goods inventory ending. And this will give us our cost of goods sold. Cost of goods manufactured is given to you as 40,000, which means we had that available to sell, 19 plus 40. But we ended up with 16,000 as it tells us. So our cost of goods sold is 59 minus 16. So that's 43,000. So sales minus cost of goods sold equals gross profit is 49,000. And then, of course, the income statement needs to end up with our net income. So that'll be the bottom line. But what comes out here of these? Some other expenses, right? We have general and administrative expenses. We have selling expenses. That's it. Don't let these things fool you. Accounts receivable is an asset. These things, cash and land, are assets. Equipment is an asset. These go on the balance sheet, not on the income statement. Remember, the income statement is revenues and basically your expenses. See, the only thing I see is general and administrative and then selling expenses. And I don't think it doesn't really matter which order you put those two in. $49 is our profit minus these two things should give us our net income. I get 23,000 of my net income. It's pretty common for them to give you lines that you don't need to use. And that is the case here. All right, let's go on to the next one then. Here's the facts. Garcia Company reports beginning raw materials, 855. Go ahead and put that on your sheet, 855, beginning raw materials. Or if you're on paper, you will draw a T account like this. So our beginning raw materials was 855. Now remember, raw materials can include direct and indirect materials. We have ending raw materials of 717. So I'll put that down here, 717. If the company purchased 3646, so purchases go on this side because it's an asset and we're debiting it because we got more, 3646. What is the amount of materials used? They're not really distinguishing between direct and indirect. How much was used? Well, if we had this much and we only ended up with that much, how much did we use? So you can put it wherever you want, but basically the raw materials used is going to be that plus that minus this. So it appears that we use 3784 materials, raw materials, which is correct. So again, this chapter is all about understanding the flow in the T accounts. If you can do that, then you're in good shape. A schedule of cost of goods manufactured. Cost of goods manufactured is the cost of the goods that we finished and moved over into this finished goods area. Well, we calculate it like we did cost of goods sold, really, to be honest. This plus this minus that is cost of goods sold. Well, by the same token, this plus this minus this is my cost of goods manufactured. So again, we can use our T account to get the answer. Now, work in process, right? Beginning balance. See here? See the correlation here? Definitions that are important for this chapter. Direct materials used. Look at this. Direct labor used during the period. And the factory overhead used during the period. Those all go into work in process. Now, the definition of these three things is called total manufacturing costs. You need to know that. Total manufacturing cost does not include your beginning balance, because this is the cost of goods manufactured last month. It's just we didn't finish everything, so it's still there at the beginning of the month. So that doesn't count. Total manufacturing cost for this period, this month, this year, whatever we're talking about, is just these three things. But remember, we're trying to calculate cost of goods manufactured. So to do that, we'll need to take our beginning balance plus these three things minus the ending balance, just like we did over here. So total manufacturing cost plus my beginning work in process. See that? And then we get a little subtotal. Don't worry too much about that. That's the total cost of the work in process. But then we subtract the ending to get cost of goods manufactured. Why is this number so important? Cost of goods manufactured. It's because we need that number to plop down on the income statement right here. See how they go? So cost of goods manufactured is calculated here using the work in process T account. Then we transfer that number over to the income statement here. And what you're going to see later is we're going to need some of this information for the balance sheet as well. But let's take that one step at a time. What is total manufacturing costs? Boom, right? It's always going to be direct materials, right? The direct materials used. Then direct labor. And then overhead, factory overhead. Those three things make up total manufacturing costs. And they're given to us, 190, 63, and 24. So our total manufacturing cost is 277. See, refer back to this. Then we're going to add our beginning balance, add work in process beginning, which they give you, 157. Okay. That gives us that number, total cost of work in process. Then we subtract the ending, right? Less work in process ending, which they give you, 142. Check your work. Here we we go. So as you can see, these T accounts are going to work for just about every homework problem you have. But this one's, I mean, it's not that hard. Basically, they're giving you the T accounts from the get-go. So you have the T accounts. So use these to fill out a cost of goods manufactured and the income statement, a partial income statement. So what do we got here? The reason I'm going over this one is because it's not exactly line for line like this. There's a little more complicated stuff in here, but you will see people do them like this in the real world. So again, let's take a step back. What are the three main components of total manufacturing costs? It's direct materials used, direct labor used, and factory overhead applied. What is direct materials used? Well, it's right there, right? But they didn't, unlike the other problem, they didn't just give us the answer, did they? They're making us calculate it. How do you calculate direct materials used? Well, it's your beginning plus your purchases minus your ending. So that's what they want us to do here. What do we have here? Beginning, direct materials, raw materials beginning, plus what? Purchases, right? Add raw materials purchases. So hopefully they gave us those numbers. Here's the raw materials. There's my beginning. There's my purchases. 10 and 45. And the raw materials available for use is 55, like they show you here. Now, obviously, we know from the get-go how much direct materials were used, 46.5. They tell us right here, but they want us to show us the steps. And then we're going to subtract the 8,500 to get to the 46,500. So minus 8,500. So less raw materials ending, right? I forgot the number already. 8,500. Yeah, 46.5 is my raw materials, direct materials used, 46.5. I guess we don't have any indirect materials, right? Because if we did, that would come out of here too. It's okay, we probably don't have indirect materials. Now we're going to do direct labor, right? And that should be just given to us. Should be given to us. Where is it given to us though? Let's see. Direct labor right here. 27,500. It's in there. Right? Because direct labor used is in the work in process account as a debit. There it is. So 27.5. Now the factory overhead should be also given up in here. Yeah, overhead 55,000. 55,000. All right. These three things is my total manufacturing cost. See me swiggling the cursor? Then we're going to add our beginning work in process, right? Because that's what it says. Add our beginning work in process. Add work in process beginning. And of course, I can go to my T accounts, work in process, pull my beginning balance, which is given to us, 14,000. Getting there, almost done. And then we subtract something to get cost of goods manufactured. See, here's cost of goods manufactured. So we have those. We add that. We subtract the ending work in process to get cost of goods manufactured. So we subtract the ending work in process, right? Less work in process ending. And that's given to us as 12,000 right here. That brings this 143 down to 131. I'm going to go ahead and check my work here, because if this is wrong, my income statement will be wrong as well. So go ahead and check your work after you finish the first part of it. So this is looking good. Now I can go to requirement 2. So this is a partial income statement that's only showing cost of goods sold. What's included in cost of goods sold? Let's take a look. It's all about finished goods, isn't it? So my beginning balance in finished goods is given to me right here. 16,000. Finished goods beginning. Plus cost of goods manufactured. Cost of goods manufactured, we calculated that over here and it was 131,000. And then we subtract our ending finished goods. Ending finished goods, 18,000. And that brings the 147 down to 129. So that's my cost of goods sold on my income statement. So yeah, chapter 14 isn't hard necessarily, but it's very important to understanding the next few chapters. So I just want to make sure that everyone understands chapter 14 before we go on to 15, 16, 17. And again, I know I keep saying this, but the key is these T accounts. You got to understand how they flow. Again, don't worry about this account too much. This we'll be covering this in chapters 15, 16, 17. So this is mainly what we're working with in chapter 14. And if there's nothing else, I guess I'll see y'all next week for chapter 15.